Hey, welcome back to Two Super Guys Try Stocks. I'm Dylan.
I'm Vinny.
And there was a chief U.S. economist who has called for a hard landing. We're going back to this stuff. So we're going to take a look at the probability of a soft versus hard landing. But more importantly, I want everyone to vote. All right, we're going to go over all the data with GDP, unemployment, all the stuff. But you have to tell me if you guys are hard or soft. Okay.
Two stupid guys trade stocks.
Just move past it.
Yep. Oh,
Everyone knows the rules. One take.
No, the rule is when it's soft, you can't do anything with it. When it's hard, someone gets screwed.
They're solid, man. Yeah. People think we rehearse this.
Nope.
We don't. So basically, this guy from Citi is saying that we are headed for a hard landing. Now, this matters a lot, especially for people who are A, in a TLT trade, like me, and B, have a lot of cash on the side waiting to use it, like apparently Warren Buffett, as we saw yesterday, if you watched that video. Warren Buffett sitting on a bunch of cash, and I also am saving a bunch trying to do something with it.
Nice.
So,
Nice, not 200 billion, but nice.
it's very close.
Yeah.
Very close. Just like 8 orders of magnitude lower.
Yeah. Perfect.
Doubling down on his contrarian view, Chief U.S. Economist Andrew Hollenhurst, I don't know who that is, sees a hard landing. And more importantly, this came out 5 days ago. He's calling for 4 benchmark rate cuts this year.
Okay.
Okay? I don't.
Sure.
That seems shocking to me. But
Yeah.
let's give this our due diligence. Everyone, if I want everyone to vote, we're just going to lean into it, hard or soft, in the comments at the pin. All right, because I'm actually kind of curious here. So, what is a soft versus hard landing? Essentially, you have the central bank that has interest rates that determines if you do this too fast, you could have a hard landing. If you go too slow, if you go too fast, you have a hard landing. Ideally, you want a soft landing because there are consequences of a hard landing. So what is a soft landing? Soft landing is when a cyclical slowdown in economic growth that avoids a recession. Okay? So you have the goal of the central bank when it seeks to raise interest rates just enough to stop an economy from overheating and experiencing high inflation, which we definitely are, without causing a severe downturn.
Yeah.
So hard
Fair
is the
enough.
exact opposite. Okay?
Oh, yeah. Break it.
Now, that was weird. Here is an example of a soft landing. Okay? So when I look this up, everyone essentially agrees 1994, 1995, Alan Greenspan did fantastic. I put the actual rate changes from 1994 through 1995, but essentially between those dates, Greenspan led the FOMC to almost double the Fed funds rate in just 7 increases. After a brief recession earlier, early 90s, the U.S. economy had fantastic GDP growth following that. Unemployment rate decreased. Everyone was very happy. Inflation decreased. It was a great time. Okay. Now, let me move your face here. So the green is that time. So you can actually see the unemployment rate drop, 6.5 to 5.6. You got to see the annual GDP growth and the inflation. So good job, Alan Greenspan. Now let's look at the early 80s, which is a good example of a not soft landing. So you go from 7.2 to 10.8% unemployment.
Perfect.
That is bad. That is not good. On top of that, your annual GDP growth is shit.
Yeah.
What? Here we go. Not good. Look at that.
Yeah.
Very, very bad. And your inflation rate, it did decrease rapidly, to be fair.
Yeah. It's hard to spend money if you don't have a job. That's the 10% people there would say to you. So
Yeah.
not surprised.
And you can actually see, here's the interest rate going back from the 50s. We were almost at 20%, and then 3 years later, 7%. That's pretty, that's a shock to the system. Not
Yeah.
ideal.
I think
Now,
that was very much an intentional decision at that time, though, because that was
mhm,
Paul Volcker when he really wanted to stave off any additional waves of inflation after having e- eased too early twice before the Federal Reserve had.
I do agree. Yes, it was on purpose. I do think the almost 11% unemployment rate was not on purpose. That is a problem. The 11% is quite high. So the three pillars of this: your GDP, unemployment, and inflation. Vinny showed this earlier. I'm gonna have you talk about this.
Yeah. So basically, you're looking at the actual portions of the consumer price index and which ones have come down over time. We still had some negative kind of room in goods, but services have remained pretty consistently elevated. Particularly insurance. If you look on like a category by category breakdown, it's been the one that's driving inflation still at this point. We've made some good progress, but still have some room to go for sure on the inflation front.
It's kind of scary that it's literally not moving at all.
Hmm.
It's just hanging out there. So that is not ideal. If this stays, then I see no reason to cut rates. Cutting rates too soon would be a problem, unless there's something happens to the other two pillars here. So let's look at
Yeah.
the GDP. Okay, now this top graph is so skewed because of COVID. It You can't even appreciate the changes.
Yeah,
So
absolutely.
I zoomed in. So just to 2022 down here,
Mhm.
you can see we have decreased 2 quarters in a row.
Mhm.
Now, quarter four, 2023, we had 3.4%. Quarter one, 1.6%. A recession is considered 2 consecutive quarters of decline. Now, that used to be the definition. I don't know what happened to it.
Yeah,
People
it's
just
still
like,
part of it.
yeah, people just
Yeah.
like disagreed in COVID. They're like, nope, no recession. But
Yeah.
like I don't know. It, I'm still don't know. If you look it up, there's still multiple people saying yes there was and no there wasn't. So
Yeah.
I don't know.
Perfect.
Whatever. Here's the annual growth. You can see, 2021 is absolutely insane. We're still increasing on an annual basis.
Mhm.
So, unemployment rate. I'm going to show you what that gentleman earlier said about this latest uptick. So, we did get higher to 3.9%. This is nowhere near 10 or something crazy, but his point is this. He said we're in a higher for longer stage of the policy cycle. The next stage of the policy cycle is a weakening of the labor market. Once it starts gradually weakening, it then weakens more sharply quickly.
Okay.
So he's calling for unemployment to drastically change in the next 6 months. All right.
Yeah. We had layoffs come in a little bit elevated in this past week too,
Mm-hmm.
so we definitely have seen some softening of the job market over the last like month or so.
Yes. Once again, I put this graph in here just to show how ridiculous COVID was. It just ruins all the close up. It's
Yeah, I
crazy.
love it.
Here's the best part of this. All right. I don't understand how all these people have jobs. I don't get it. I don't get how you can be at this high of a level and drastically disagree over so many things. These two articles are 2 months apart. The one on the right is February. The one on the left, obviously these are different organizations, is April. So
Mm.
left, we have a 33% odds of the U.S. economy entering a recession by end of quarter one. On the right, we have an 85% chance of recession in 2024. Those
Perfect.
are so different. I don't understand how there's not a job review for these economists that will say, I don't get how you can say, hey, we're going to have a recession this year. I'm 85% certain, and then it doesn't happen, and then that person still has a job.
Hmm.
I don't I don't get it. Especially we're in medicine. If I said I would be sued.
Yeah.
I would be fired so fast. I don't get it.
Yeah, I mean, weathermen and economists, I'm not sure which one has a lower standard there, but people will argue that the true purpose of an economist is to understand past events, not to predict future events.
Yeah, then shut up. So
I love
don't
it.
do it. All right. So here's some dates to these are going to be kind of important. So May 15th is your April CPI. May 30th is your GDP, the second estimate. So they've already done the first one. There's usually just some couple tweaks. And then June 7th is going to be the jobs report. I think the jobs report is probably going to be the most important of these three because we're going to look at the subsequent month after the increase. All right? So where you guys at? Hard landing or soft landing? I feel very bad saying I'm on a hard landing because obviously people go out of work. It's very, very tough on a lot of families. In the same world, though, the stock market, the stocks that I want will be on sale. Interest decreases historically during a hard landing. I am trying to accumulate more TLT, but I'm also not willing to increase my risk beyond what it is right now, especially when I'm just getting 5.5% free money, free interest. So
Yeah. Hard to pass up that 5%. That's what Warren Buffett would say.
yeah, it's not easy, man. It's like every time I go to buy something, I'm like, I really want to have NVIDIA in my portfolio, but that's just so expensive. It's crazy. Not at this price.
Yeah, I get it. All
Where
right,
you
I'll
at?
take the soft landing position. I think that's what they're going to happen.
Soft?
Jerome Powell is doing his job. It's going to be a softer landing.
Softer? So you're soft?
Yeah, totally soft.
Yeah. I'm going to have to be hard. I'm going to be pretty hard on this one. All right, guys. Let us know what you think.